picture this. You're sitting across from a buyer, a smart guy, an engineer, and they make really good money and they're looking to buy their first rental. And halfway through the conversation, he leans in and he goes, "So, how does this actually help me with my taxes?"
And that right there, that exact moment is what really can help you keep a client or lose one to another agent.
Because honestly, most agents are going to do one of two things in those situations. They're either going to give some super vague answer and then try to go back to the listing presentation, or they're going to tell you to go talk to your CPA and hope that the client actually follows through, which in most cases, they don't.
And that's the difference between an agent that closes investor deals and one that doesn't.
We literally just did a cost segregation for our 2025 taxes on one of our properties, something we'd never done before, and we learned a ton, something I wish we probably would have known about sooner.
So let's get right into it.
All right, Nico, when you first sit down with a potential investor client, really how much of the conversation is about the property and how much of it is about everything else, like financing strategy, taxes, rental strategy? Like, what's the breakdown?
That's a great question, Anna. And honestly, every investor is going to be a little bit different. They definitely want to know a lot about the property. They want to know what are the benefits. Most people are getting into real estate for long-term wealth. They understand the value about appreciation. The longer you hold on to a property, the more equity you grow. So they definitely want to know things about that. They want to know about what we're going to be talking about today, the tax benefits, how you can essentially do paper losses and pay less in income taxes. So most of the time they do want to make sure it's a good quality deal. We're going to help them as agents doing some deal analysis, but they also want to know everything around it. They want to know the financing. They want to know, does it make sense putting a 20% down payment versus a 30% down payment? Especially in today's market, it's a little bit harder to cash flow. So talk about all the things outside of the actual property. Talk to your investor to make sure it actually makes sense to them.
Okay. All right, Nico, let's set the table. Why is it that the tax side of real estate is one of the biggest blind spots for most agents right now? And why do you think it's costing them deals that they didn't even realize they were losing?
Honestly, Anna, the tax isn't the fun, the sexy part of real estate, right? And, if you want to read the tax code, there's hundreds and thousands of pages that you actually need to learn and things like that. So a lot of agents put the blinders on because they don't really understand it. Full transparency, until the last 2-3 years of getting into this investing world and learning a little bit about it, definitely not going to say I'm an expert, but understanding a little bit more about it. If a client came up to you and asked specific questions, you may just be a little bit hesitant because you don't know. So what would you say is the biggest blind spot?
So something that I personally encountered with taxes, and I'll say even with like listing clients, not necessarily investor clients, but clients in general, which is why I love learning about real estate investing, because I think it helps on both sides, whether investing or the agent side, is we come across, especially this day and age, lots of people that own homes, have owned it for decades, may own it outright, are ready to sell, have no debt on the property. I had a client like this, and they wanted to sell, and the property values have shot through the roof. And something that I pointed out to this client that they had never thought about was the fact that when they sell this property, the likelihood is that they're going to end up having to pay capital gains taxes on that property. And so I had mentioned that to them and told them to talk to their CPA. And then I provided alternative solutions if they chose to go ahead and move forward with the sale, to do something different that maybe would help alleviate some of the capital gains taxes, something like seller financing, which most agents don't realize they can, advocate for or teach their clients about, and is actually a really good tool for kind of offsetting some of these taxes that this client may end up having to pay if they have lots of equity built up in the property.
And that could be a huge deal. And just talking about the capital gains is a lot of people, let's say the baby boomers that bought homes in the 70s, now they own it free and clear, right? And they have no idea. That is a huge blind spot for them, and also for us for not mentioning it as agents. And if they were to just sell it on the market, there's going to be a big tax bill at the end of the year. So we're going to be talking about a few things that they can do in this episode, but I'm so glad you mentioned that.
Yeah, because I think that a lot of people will move forward anyway, but they move forward at least understanding that this is something they're going to have to address. And I feel like it's something that really sets an agent apart when they can, like, this is the whole thing. Like, we're not just buying and selling houses. We're positioning ourselves as like wealth advisors with real estate. And I think that's one key way that we can prove our wealth, our value as a wealth advisor when it comes to real estate, is pointing something like that out that most agents don't.
For sure. So we're going to be talking a lot about taxes, right? And we'll get the disclaimer out of the way, right? We are both not CPAs, and this is not tax advice. We encourage you to talk to your tax professional, your accountants, and things like that. So definitely make sure that when you are an agent and you're talking to your clients, you want to know some of this for your own knowledge. Maybe keep the conversation going, but we're never going to be giving out advice as real estate agents.
Yeah. And I think part of that is very clear communication when you're talking to your clients, is stating upfront, I am not a tax professional. This is not tax advice. I highly encourage you to go speak to your tax professional that helps you with taxes, your financial professional. And a lot of times I know I tie it into, these are things that I have done personally. These are things that I have friends that have done. And I just want to make sure that you're aware of this. But just communicate upfront and consistently as these conversations kind of unfold and mature. Like, I keep reminding them, this is not tax advice and I am not a CPA. I just want you to have all of the questions and have thoughts in your head of what you may want to go talk to your tax advisor about that you might not have thought of if we hadn't had the conversation. So communicate.
Over communicate.
Over communicate so you don't get yourself in trouble, and then put it in writing.
That's right. So let's break it down to the main things. And I know we had an episode with a great tax professional in the past, so definitely check that one out. But we're going to be breaking down the benefits of owning real estate in plain English, right? So the first one is, you probably have heard, because owner occupants can definitely take advantage of this as well, is the mortgage interest deduction and the property tax deduction. Anna, you mind explaining what those are?
Yeah. So, and again, I will say talk to a tax professional because the tax laws change pretty much year to year. So, with mortgage interest deduction, essentially the interest that you're paying on your mortgage, you can take that and you can deduct it from your taxes. There have been some changes in recent years as far as capping how much you can take in certain types of deductions. And in some cases, people end up taking a standard deduction. So, talking to a tax professional really is the best way to go to determine whether it makes sense to take the mortgage interest deduction. And the property tax deduction, similar thing, taxes that you pay on your property, you can write them off of your federal taxes. It just is a matter of talking to an accountant to figure out whether it makes sense to take the itemized deduction, which means the specific like dollar amount for each of these, or if it's the standard deduction, which is the total lump sum that they say you can take $10,000 total if your deductions don't quite add up to 10,000, you'll take the 10,000. But if some of your, that kind of tax professional moment.
And planning too, if you're talking to a tax professional, plan ahead so you're not just scrambling at tax season. But another one that comes up is repairs and maintenance on the property, right? So as we all know, at least here in my area, homes are sometimes 50, 60, 70 years old, and you have to do repairs. Actually, I just went through this last year when we had a water issue in the basement. So we had to do some excavating. We built an overhang and we kept receipts. You got to make sure you keep receipts of all the work that you do with the contractor. But those are things that you can also deduct because you're doing it for your business as an investment property. Yeah. Did you have any maintenance or repairs this past year? I'm sure that's a big one.
We have lots of those. So you always keep receipts. This is primarily, I think what we're talking about here is primarily on rental properties or income producing properties. I was just going to say that, and again, it depends specifically on the tax law. So you have to make sure you stay or have someone that stays up to date with them. But I think on your primary residence, at one point, there was like a tax deduction if you bought like energy saving type appliances, like HVAC systems and things like that. So I highly encourage you to, again, talk to a tax professional and plan, because repairs, maintenance, and operating expenses for rental properties, for sure, those you want to keep those receipts, and those can usually be written off against the rental income. There also may be things for your primary residence that's important for you to understand and know.
Yeah, for sure. I'm going to just name a few more deductions that maybe some people don't think about. Property management fees. So if you're using a property manager, especially if you're doing out-of-state investing, those can be deducted. Travel to and from the property. So maybe you can use an app. I use Stride, where you can anytime I'm going to one of my rental properties, so me as an agent, anytime I'm doing showings and things like that, I'm tracking. So I can be deducted. Education is a big one, right? So Anna and I both go to retreats or, things that we're trying to learn more about becoming better agents, becoming better investors. Those are things that you can deduct. Your home office and legal and accounting fees. So those are all just things to think about when you're talking about deductions. But the big one, and the one that really could benefit any real estate investor, is depreciation, right?
Uh-huh.
So the IRS lets you deduct a portion of the property's value every year, even when the property is going up in value, which is crazy, right? And it allows you
Uh-huh.
to deduct even though the properties are still going up. So real estate depreciation is a powerful tax deduction allowing property owners to recover the cost of an income producing asset over its useful life. So it's different on the residential versus the commercial side. So for residential, it's 27.5, where on the commercial side, 27.5 years. And on the commercial side, it's 39 years. So what does that mean, really? How do you calculate depreciation, right? So it's the purchase price, the closing costs, minus the land value is your depreciable basis. So I'm trying to break this down. If you bought a property for $120,000, the land value is $20,000. So your depreciable basis is the $100,000. You divide that by the 27.5, the standard IRS timeline, and that's how much you can deduct every year
Each.
for your property, which is pretty cool, right? So it's a big it's a paper loss. What we're going to be talking about paper losses, but it's a loss that your property takes on paper from the IRS to show that, as we know, properties deteriorate, they depreciate. So this is a cost that you can do to show, even if your property is producing a certain amount of rental income, it's losing money on paper from depreciation. I don't know, did you have anything to add to depreciation? Because I know this is a big one that most real estate investors use.
Yeah, no, I think we're going to talk about this actually in a couple of minutes because again, tax laws change. I feel like a parent, like repeating myself over and over again. So you gave the standard definition for depreciation, but in the past year, there was actually a new tax law, or I won't say new because it's been on the books before it went away and now it came back where you were able to actually accelerate the depreciation. But we're going to talk about that in a second. But I think you said it correctly. I do want to say with depreciation though, it is a paper loss, like you were saying, where essentially we're not actually losing anything because the property is still going up in value. We're still collecting rental income, but you're showing that there is a deduction in the value of the property based on the tax code. But this is not necessarily free money either. When you go to sell this property, if and when you get to that point where it's time to move on and sell this property, that is depreciation that will be taken into account at the sale of the property. So it's not like yes, I took this loss and I never have to pay it back again. It is something that will come back to, I'll say, haunt you if you do go sell the property.
100%. And we'll talk about ways that we can possibly continue deferring that. So a different tool. But one last thing that I wanted to talk about on depreciation is how rental income is taxed a little bit different than our W-2 income, whether you are an engineer, whether you are a teacher or whatever. Rental income is actually taxed as passive. And I don't like using the word passive, but the IRS does it. So it's passive income. So the losses from your depreciation can only offset that rental income that's coming in. Unless you're a real estate professional status like Anna and I, and if you're an agent listening, we'll talk a little bit more about that. But I did want to dive into what you were just talking about. So you and Brian just did a cost segregation study. And for those agents who never heard of it, never heard of it before you're becoming an agent. So one, what is that? And how can you use that in plain English to explain the benefits for any investor that's looking to do one?
Okay. Yeah. So I'll say I never heard about it until I became a real estate investor. We don't talk about this in real estate agent school, like cost segregation is not a thing. But I will say I didn't learn about this until I started going to the investor meetups.
Yeah.
So if you're an agent and you're like, I never learned about that as an agent, like you're not alone. Most agents have no clue what this is. So a cost segregation study is essentially, it is something you have to pay for. So you have to decide whether the monetary benefit of doing the study is worth it at the end of like what you can get in tax savings. But essentially, Nico mentioned that the depreciation, the IRS has a certain like timeline that it is set for properties. For residential, it's 27 and a half years for the property as a whole. However, you do have the ability to do what's called a cost segregation study, where basically you have a third party that is licensed and specialized in doing cost segregation studies, and you provide a breakout of like, when did you put in a new HVAC? When did you put in a new roof? Was there new flooring, new countertops, new, like, you basically list out the ages of the different components that make up a house, and they actually depreciate on a different timeline than the 27. Many components depreciate on a different timeline than the 27 and a half years. Some actually depreciate on shorter timelines. And this is all laid out. But in most cases, most rental property owners don't have this study that breaks out all the different components this way. So they just take the generic, like, overarching 27.5%. But with a cost side study, you get that broken out, you get the ages broken out, and you can actually go back with your accountant and have them. What they did this past year was, it's called accelerated depreciation. And in this case, we could take 100% accelerated depreciation. That's with the current tax law. It had been in place before, and then it had kind of stair-stepped down. And then it was eventually supposed to go away, but the current administration decided to put it back in. So essentially, something that maybe depreciates in, instead of 27 and a half years, maybe it depreciates in 10 years. And you can take that all up front. They've set it up so that a lot of this depreciation, the bonus depreciation from a cost segregation study, you can take it all at the front end of, instead of waiting the 10 years, the 15 years, the 27.5 years, and taking it in small chunks. You can lump it all at the front and take that as a paper loss, and that helps offset, like you were saying, some of your passive income. Or, and we'll talk about this a little bit more, active income, depending on your status. Does that
You
make
did
sense?
a great breakdown. So basically, you're front loading all this depreciation. Again, you're still going to have to pay it down the road, but you're front loading it so that you are able to lower your taxable income, right? So this is a huge play on, the big commercial properties. Also a benefit for on the residential side, but commercial, if you're buying a multi-million-dollar property and you're doing a cost segregation study, and then you're front loading thousands and thousands of dollars in depreciation, that you can look at all these paper losses to make it look like you offset things like that. So as you mentioned, it is a upfront cost. So it can cost a couple $1,000s to do. So you want to make sure it really makes sense for your situation. Yeah, as you mentioned, not every part of your home is going to age the same, right? A HVAC is going to age a little bit different from your roof. So the cost study is one extra step that investors or your investor clients can take, where you can help them lower that taxable income.
Yes. And you made a super great point that I know I didn't know at first, which was, I'm thinking, oh, my house is worth $700,000 or $800,000. Well, that's not actually what goes into the cost seg study. It is just the property, just the structure, not the land. And so that's where you kind of have to do the math, figure out the cost of the study, which also was surprising because, they used to be several thousands of dollars. Now there are cost segregation companies that a lot of them can do it online, and it's at a fraction of the cost of what it used to be for a cost segregation study. But it's just really understanding what parts can be depreciated, and then the cost of the study, and then working with your tax professional to see if the bang is worth the buck. Like, am I going to capture enough of a tax loss, or is it going to affect my taxes in a positive way? Is it worth doing it now, or is it worth waiting down the road to do it?
Okay. And I know you mentioned this year, and we'll move on in a second, but this year was the first time you and Brian done it. Why did you decide you guys wanted to do it, and what kind of surprised you in the good way?
So for us, and we'll talk about this a little bit more, but Brian is still a W-2 employee and he makes a very good salary. And so we basically were looking at, okay, what losses did we already have on paper versus his salary? And we'll talk again a little bit more about this, but because of my professional status, we're able to push some of these losses and kind of reduce his taxable income because of the way that things are set up. And so because we had two properties we had just done full renovations on down in Danville, we said, okay, I think this is the right time. The renovations are complete. Both units are now in service. We did the cost segregation study. We talked to the accountant and figured out, okay, what does that look like for us on paper? And so it was very helpful because we ended up with a very substantial tax return, which was lovely, which we actually turned around and ended up using that to pay down some of the mortgages on some of the houses. I'm not to go into specific numbers because I think
Mhm.
Brian would kill me, but I mean, we're talking about like tens of thousands of dollars, not like
Yeah,
500 bucks.
yeah. You want to make sure that you're having this sounded like you did some planning and things like that beforehand to make sure that it makes sense. So you want to also do this cost seg in the tax year that you're doing it to make sure that you can take those losses. So I think this actually ties into the next question because when we're talking about, I think we opened with the higher W-2 earners, people that work for the government. We're in the DMV, people that work for the government, the doctors, the engineers, the architects that, make a lot of money. And then at the end of the year, they look at how much they're paying in taxes, and it's it's heartbreaking, really. We want you to pay as much taxes as you legally should, but there's a lot of different ways, and real estate is such a powerful tool. But why is real estate one of the less legal tools for those type of individuals?
I mean, honestly, there's just so many tax laws that are this country. Actually, if you go back and watch our 1031 exchange episode with Sarah, she talks a little bit about the fact that this country and the tax law was structured in such a way that they want you to keep investing in real estate. They want you to keep reinvesting into the country. And so a lot of the tax laws are just set up in a way that if you're a high income earner, you're able to buy assets, you're able to get expenditures or like expenses write-offs from a lot of these rental property. I actually know some people that are high earners that buy a rental property. Like here in the DMV, this is definitely an appreciation market. So they have enough income coming in where they may buy a property that is a rental property, but it's actually taking a loss because the rental income doesn't quite cover the costs of it. But they're banking on appreciation. So they're essentially putting money in a piggy bank and then they're getting to write off some of those losses against income. This is where I'm not a tax professional, and Nico may have to jump in here because I recognize there is a fine line between what you can put against active income versus passive income. And
Mhm.
so if you don't have enough passive income to write off against, I highly encourage, I don't know, go like start dating a real estate agent or something.
No, but you bring up such a great point, right? These individuals that are making money and they maybe saved up a bunch of money and they're thinking about retirement maybe in 15, 20 years, and they're okay with buying a property here in the DMV and it not cash flowing per se, but because they're saving 20, 40, $50,000 in taxes because of that rental income and the losses from depreciation or bonus depreciation and things, the cost segregation and stuff like that, they're okay because they understand, in 10, 15 years or 20 years, those properties are going to be a lot worth a lot more and they're going to be in a better position than they are today. So it's when an agent is talking to these higher earners, a lot of these individuals are very smart. They look at spreadsheets, the engineers, they understand it. So if you're able to kind of definitely don't go deep into the taxes, make sure that they're talking to a professional, but let them understand the benefits of especially in the current tax laws of bonus depreciation and things that you can do to help offset your taxable income. I was talking to a client the other day that she is a doctor and she is like, I've been talking to you for 2 years. I know I need to buy real estate. My accountant is telling me I need to buy real estate. So this is the year. So we actually are going to start touring properties actually this weekend. But it's one of those things that you're like, most of these high income earners know. They already know. They just need to know how to go about doing so. So you as an agent need to position yourself as that, as that person that can guide them through the process.
Yeah, I agree. And if you have a basic understanding of even like a small fraction of any of this, you're literally like 90% ahead of most agents in the market. Because like when they come to you and say, this is what my accountant is saying, I need to buy real estate for this reason, then you as an investor savvy agent can be like, okay, let's see what kind of property we can get to help you like make that tax strategy work for you. Where I think if you don't have as much investor knowledge, an accountant may say, well, you need to buy a property and like this for like take a loss here and do these other like I think a lot of agents would be like, what? Okay. just tell me where you want to buy a property and I'll go find you a property. Whereas I think we have at least the advantage of at least understanding the basics so we can truly help like strategize, like putting that together and finding the right property that actually like jives with the accountant's like tax strategy.
100%. We want to be an integral part to the team, right? So I know we talked about 1031 exchanges and we had a great episode with Sarah a couple weeks ago. So we encourage you to do the deep dive on that. But do
We
you
should link
mind
it in the
giving,
show notes.
yeah, we'll link it in the show notes. But Anna, can you give like a quick 1 minute description of what it is? And again, if you want to learn a little bit more about it, we encourage you to look at the other episode. But what is a 1031 exchange and how can you explain it to your investor client?
Okay. So 1031 exchange is a tax law. I think it's actually in the tax code is 1031 something. And Sarah talks about this in the episode. But essentially, if you already own rental properties and you know that you are going to be selling that rental property, and maybe you're like, okay, I want to sell this and I want to buy into a bigger portfolio. I want to buy in a different market. When you go to sell that property, if you were just to sell it outright, because it is not a primary residence and is a rental property, income producing property, you would have to pay additional taxes on that property. And that's at the federal and usually at the state level as well, depending on where you live. So the 1031 exchange, it is a tax law, it is tax code that allows a real estate investor to essentially sell a property and roll the proceeds from that property directly into a new investment property. They cannot touch it, can't go into their bank account. There has to be a third party neutral facilitator that holds all funds. But essentially, you can roll the equity that you've earned off of that sold property directly into a new rental property without ever having to pay taxes on it. So it is a great way to basically kick the can on paying taxes on real estate properties when you sell from one to the other, and you kick that can down the road. And so that's one way that a lot of investors avoid paying these huge tax bills is they roll it right into an investment property.
And the cool thing, this is going to sound terrible, but the cool thing is you could keep kicking that can
Until
until
you
when?
kick the can.
Until you kick the can, right? So you keep deferring those taxes and you can do it multiple times. And there's a lot of rules and a lot of intermediary that you have to work with. So definitely check out that episode of how you can do it. But an agent's role in that process is basically understanding that the timelines are very important. There's 180 days and 90 days, I believe, that you need to do things. So understanding that as when you're working with your investor clients, and then understanding their purchase, they need to sell, but they also need to buy. So I don't know if some agents listening have done that, maybe with like a rent back and things like that with primary residences. But if you're doing it with the 1031 exchange, understand, all right, this needs to be sold. The proceeds need to go to a third party, and then you have to go out on a timeline to find the next property. So you as an agent, your role is to understand all this and make sure, just like when we're under contract and we have contingencies and things like that, think of it as like that. You want to make sure that you're identifying these properties, buying these properties, getting under contract on certain timelines. I think that's one of the most common ways that agents can help benefit with the 1031 exchanges.
Yeah, I completely agree. And I mean, if you're working with an investor, especially if it's like an accidental investor that maybe like bought a house, lived in it, decided to rent it, most people don't even know what a 1031 exchange is. So to have, again, even the basic knowledge of like, hey, did you know that there's like, what do you want to do with this property? Oh, you want to buy another property. Did you know that there's tax law that may help you defer taxes that you would pay on the sale of this property? And like you were saying, this timeline, I actually think it's 45 days and 180 days.
Yes,
So that's why
very
you should
good.
go back and watch the episode for identifying things. But I think the other key aspect that we as agents is one, introducing the concepts, but two is knowing someone that is a facilitator that knows the process much better than we do, and essentially connecting that client with that 1031 exchange expert and their accountant, and being that like bridge between those parties and knowing that we need to get them together right away so that we can meet the timeline requirements so that our client doesn't miss out on that 1031 exchange benefit.
Yeah, I think we talk about that all the time. You as an agent, you want to be a hub for the 1031, the CPA, the contractor, the inspector. Just be, and obviously vet those vendors. But whenever somebody needs, especially on the investing side, they're going to need help with certain things. You want to be that person that can provide value that way.
Yep, exactly. We are like the hub. That's what you were saying, like a spoke on a wheel. I was
Yep.
thinking like a hub, like a data center, and you're meant like on a wheel, and we're like, okay,
Yep.
anyway,
Yep.
squirrel. All right. So we talked about 1031 exchange. We'll put that episode in the show notes. I highly encourage you to go watch it if you want to learn about 1031 exchanges and someone that's local in the DMV that can help with those. She was the guest at that point. So now, Nico, we're going to pivot. We've talked about this, sprinkled in a couple times, about the real estate professional status. And so this is very important when it comes to what tax benefits you qualify or don't qualify for. So I'm going to turn the mic over to you and have you explain what is it, who qualifies for it, just give us the dirt on what is real estate professional status.
REPS, real estate professional status, is such a game changer in real estate, right? So if you're an agent listening, you most likely qualify for this. So there are some rules, right? You need to have a 150-hour rule. You spend more than 750 hours in your professional services performing real estate trade businesses. So if you're an agent, if you're a full-time agent, that is most likely one check, right? The 50% test is half of your personal services you perform in all trades or businesses during the tax year must be performed in real estate. So if you're doing it part-time and things like that may be disqualifying you. And material participation. Reps isn't just enough. You also need to be actively participating in the day-to-day management of your property. So both Anna and I, we are real estate agents, not only agents, but we also own real estate portfolio. So if we look at all those, check, 750 rule check, 50% check, material participation check. We both are managing our own properties. So that can be a game changer. And why is it a game changer? Because you can offset your rental income from your actual active income. So we talked about it earlier. If you are not in this status, you can take the losses from your rental income. Let's just say your rental income was $60,000 that year, which is fantastic. Great. You're earning $60,000 of income passively, but your depreciation, your bonus depreciation can only offset that. Whereas, where Anna and I, we're real estate professional status, and you don't have to be an agent. You can also be a property manager or things that you are,
An appraiser, an inspector, anyone involved in real estate.
Talk to your CPA to see how you qualify.
There's a list.
But you're able to, like what Anna says, she was able to roll over some of those paper losses to the next year. Whereas, let's just say we have a great year in real estate. We make 100,000, 200,000 in our agent business. We're able to take those rental losses to help offset that actual income, which is amazing, right? That's such a game changer for somebody that's an agent. If you're listening and you're like, man, I should probably buy a rental property so I can lower my taxable income. You really should. And you should talk to Anna and I to see how that works. But one last thing that I wanted to share about, because I know it affects you and Brian, is if you're married, filed jointly with taxes, you can do that as well. So it also affects me. I'm a real estate professional, just got married. So Jessica is a hairstylist, but all our income, I guess, bundles up to one, and we can use some of our losses from our real estate portfolio to offset our actual W-2 income. So it's a real game changer, right? I can't stress this enough for anybody who's listening that is a real estate agent that has always been curious about buying their first rental property. This is really where it makes the most sense.
Yeah, I agree. There's been times like I've had a slow agent year, but Brian's still making his W-2 income. And there's the tax offsets because I'm a real estate professional status. He's like, oh, that's almost like your salary right there in tax deduction. So it is key, and it boggles my mind. I want to jump through the phone when I hear agents talking, especially during tax season. They're like, oh my gosh, I've paid so much money in taxes, or I'm behind in my taxes, because I'm sure there's lots of agents that are still out there that haven't paid taxes from the last 3 or 4 years because they just haven't gotten around to it. Mm-hmm. But they owe so much money in taxes because they did so well. And I'm just like, oh my God, why don't you just go buy rental properties? And you are offsetting your tax bill. You don't owe Uncle Sam all this money, and you're building wealth with an asset that is just going to keep growing in value. And it hurts my head that we're not taught to be smarter business people.
I think it's the most common with real estate agents because, you get these, we're not getting paid weekly, right? Like bi-weekly, we get this great commission check. Yeah, it's 10,000, 15, 20,000. And if you're not properly putting enough away for taxes, yeah, what you just talked about, you have this huge tax bill. Full transparency. If I didn't have rental properties, like I would be paying some taxes. And, it's just one of those things that you're a real estate professional and you qualify for these things. Definitely talk to your CPA to see if you qualify. Man, you got to go out there and buy at least one, um, maybe two, maybe three rental properties.
Yep, right. I mean, hell, go buy a rental property if you have like adult children or like kids are going off to college. Like, buy them a rental property and they can be your tenant. And it still counts as long as you're renting it to them at market value. There's a couple caveats there too. It just makes sense to stop paying tens of thousands of dollars in taxes and put it into an asset that is part of your retirement plan. Yeah. Okay, I'm done. Soapbox moment over. All right, Nico, now let's talk about scripts. So I'm curious. I want to know, like, when you're talking to a client or you're talking to anyone that's like, oh, it ties right into what we just talked about. Man, I just paid so much in taxes last year. Like, what do you say to them? Like, what do you encourage agents to say? Because I know we've heard it. We've all heard it at some point. And we're like, how can we help them? Like, what do you think? What's one phrase that can turn that whole conversation around?
I'm not a huge script guy, but when somebody says something like that to me, I try to dive in a little bit harder, like push the pain points, right? Oh, doesn't that sucks, man? You pay much, you pay that much in taxes. Do you think there's another way? I mean, you're talking to a real estate guy, right? There's obviously a different way. And then kind of weave in things about, hey, would you qualify for what we just talked about, a real estate professional status? Oh, great. You can like buy a rental property and help offset some of your actual W-2 income and lower your taxable income. Oh, I never really thought of that. Or, hey, maybe you should see if your wife, I know she is working part-time, but maybe if she got her license and she's actively becoming a real estate agent, that can help both of you guys. So kind of weaving everything that we just talked about in, but really, again, asking questions and touching those pain points, because yes, there's so many people that at the end of the year, they're like heartbroken. They see how much should I pay in taxes? Like, and it's one of those things that a lot of people just don't know. They're like, oh, that's just the way it is. And people that are listening that do have those big tax bills, usually engineers or somebody that's really busy and really good at their job, they might love their job. And you don't have to actively be participating in your rental properties. You can get a property manager and things like that and grow your nest egg for retirement. That conversation can weave so many different ways. I would say not shying away from it, right? If somebody brings that up, like, okay, what does that mean? Like, what are you going to do about it? Like that,
Sure.
one of those things like, all right, yes, that sucks, but have you heard about rental properties and what that would make, how that would affect your situation? I don't know, Anna, what would you say when somebody says something like that to you?
I tend to be a little bit of a storyteller. So honestly, like you, I don't really do well with scripts. I mean, you can tell when I try to read a script, I'm all like, so how did that go? No, I honestly, a lot of times I lead with stories. I lead with personal stories. I always do the disclaimer, of course, that like, we talked with an accountant and we figured this out. But I like to, we used to pay a ton of taxes too. And then we started doing real estate investing. And because of the real estate investments and with a good accountant, we're able to offset a lot of our taxes and actually make some money, actually get a tax return versus paying taxes to Uncle Sam. So usually that's kind of my shtick is like kind of, or for people that don't have the same experience that I do, I will say, I encourage you, if you're an agent, like if you see training, 'cause I know a lot of, title companies, a lot of local vendors will do trainings, and sometimes you'll see one for 1031 exchanges, for tax benefits for agents. I highly encourage you to go to those meetings, ask questions that may be relevant to some of your clients. And then even if you don't have a personal story like I do, you can always talk about like, hey, I just went through this training program and I learned about 1031 exchanges, or I learned about bonus depreciation. This is kind of a high level of what that is. I think this may be good for you, but let's have you talk to your accountant. So that's kind of how I come at it. I don't do scripts either. I tend to come from a storytelling perspective with personal experiences. Like I said, if you don't have a personal experience, go to these classes, learn from other people, and then you can at least speak to your education and speak to other people's stories and then point them in the right direction.
Yeah. or just use our stories, right? Like Anna just talked about how a cost seg was able to save her and her husband tons of money. Like bring that up. Like I have a good friend. I listened to a podcast that they talk about these things, right? And then that way, stories sell. Stories really sell, and they can put themselves in the shoes of us or other. I love your idea about going to trainings, but the stories are going to really bring it to life. Um, so Anna, from your seat as an investor, like when an agent brings up these tax benefits, the cost seg, the depreciation, what makes you think like, all right, this agent actually understands it versus like somebody that's like, kind of just blowing smoke?
Um, I think some of it is for me, and I guess I'm projecting. So a lot of this with me is I know enough about it to tell you like, hey, this is something you may want to consider. I think the fact that I think I know it well enough that I would be able to be like, that person has no idea what they're talking about. And I think a lot of experienced investors probably are in a similar seat, but I put a lot of value and weight in someone that's like, hey, this may be something you want to consider. This is kind of a high level, but that's not my profession. I have an accountant that, like, if you don't have one, I highly encourage you to talk to one. If you have one, if not, I have someone that can talk to you about X, Y, Z, which is specializes in like real estate taxes, real estate law, or whatever. So for me, from an investor seat, I think it's someone that can speak at a high level and at least like recognize where there may be some tax advantages that I may miss, but then kind of know their role and be upfront and say, like, this is not my swim lane. I just want to give you information to be dangerous. And I have people that you can talk to that can really help you figure this out. That's kind of my perspective.
Yeah, I love that transparency. Like if you're a newer agent listening to this and all this is kind of going over your head, the last thing you want to do is go in and be like, oh, you should do a 1031 and this and that and this and that. And then they ask you a follow-up question and you're like, oh, transparency whenever you're working with anybody is the most important part. If you don't know the answer, I don't know that answer at the moment, but I know somebody that does, and I'll get back to you later today or things like that. So I encourage you to, learn about it. Go to these classes, come to the Cash Flow Breakfast Club, come to listen to the podcast when they talk about all these things, so that you do become knowledgeable like Anna and I know a little bit. We're not experts, but we do know a little bit more than the average agent. So we want to make sure that when we are speaking to these individuals, most of the time they're going to be very smart. If they're higher earned, they're smart individuals. So they can sniff out somebody that's BSing them really early. So that's the last thing that you want to do.
No, I completely agree. And then, I mean, in some cases, like if you do talk about 1031 exchanges, you find yourself a facilitator, and then you find our episode that we had a 1031 exchange person on the episode, and send that link to your client and say, here is a breakdown of what a 1031 exchange is. And then here's a contact info for someone in the area that you can reach out to and speak about it more specifically.
Yeah. And speaking of that, actually, and so building a team is so important. We talk about this all the time. I think one of our first episodes was talking about building a team, but when specifically talking about taxes, I think a CPA or, a 1031 intermediate is a super integral part of your team. Where does somebody who's listening, you can go about finding one?
Ooh, I think it's just like finding a lot of your other teammates. I would say like a CPA, an attorney is another one. I will say ask your network. A lot of times I love the people like the 1031 exchange facilitator that I have, the attorney that we are now using, the CPA that I use are all from network connections where I said, hey, I'm looking for a real estate, like a lawyer, a CPA, someone that has real estate experience, because not all CPAs, not all attorneys are created equal. That's not, a lot of them, that is not their focus area for when it comes to their practices. So like a CPA may know the general tax laws around real estate, but they may not be able to strategize with you. Like having a real CPA or a tax strategist, that's separate from a CPA, but there are some CPAs that know enough about real estate law, and that's their specialty, that they kind of have a hybrid like tax strategist and CPA that can actually work with you to use the tax law in the appropriate ways to get you back the most money. Whereas a standard accountant, they'll read the tax law and they'll follow it by the letter of the law, and they don't really know or need to or want to get creative because that's not their swim lane. Same thing with attorneys. There's definitely attorneys that know real estate law significantly better than a divorce attorney or I don't know, patent attorney. Like pick your poison. So I will say finding them within your network, going to investor meetups. Sometimes some of these same professionals actually go and sponsor meetups. They like to attend meetups because they like to be in investor type communities. You can go online to different forums. We've talked about Bigger Pockets. Cash Flow Breakfast Club has an online presence like on Facebook and stuff, and just ask people for these professions that are specializing in real estate. I would just encourage you to make sure that they are real estate focused.
And you mentioned all those great in-person meetups, and that's probably the best way to do face-to-face, take them out to coffee, understand, how their business works. But I encourage you, if you're an agent and you're really trying to dive deep into the real estate investing world, join some Facebook groups that are real estate. They have groups all over real estate investing, Montgomery County, real estate investing, Arlington. And they're going to be referrals, sometimes deals, sometimes off-market deals, that a lot of these individuals, CPAs, 1031 intermediate, they might be in there as well. So you can send a little message, hey, I'm looking to get a good vendor in this area that specializes in real estate accounting. And again, referrals go a long way. So kind of go out there and find. Anna, we're going to go into the last final questions. I know we're running close on time, so rapid questions. So what is the most underrated tax benefit of owning real estate that nobody talks about?
Oh God, I feel like we talk about all of them. I feel like everybody talks about depreciation. I definitely think 1031 exchanges, if you're a real estate investor that wants to roll from one to another, like I said before, especially if you're a accidental investor, I don't think people have a clue what 1031 exchanges are. I think that's a big one. And you don't need to necessarily be a tax professional to tap into that one. And I think the other underrated tax benefit of owning a rental, I'm thinking of it. Oh, go ahead.
I would jump in because I think what you talked about today with the cost segregation studies is such it's a niche, and I'm not sure how new it is, to be honest, but I know that breaking down depreciation, front loading it could be such a game changer for especially these higher income earners. So that is one that, nobody really talks about. I never heard of that before I got into real estate. So knowing that, and definitely talk to Anna if you, want to talk about specific studies and things like that and what it would make sense for you. But I think that one's one that's kind of slept on.
I think so too. And that's like a broken record moment. I will say, I think that one, the power behind the bonus depreciation or the 100% bonus depreciation really does ebb and flow with the tax law. Because like I said, it was on the tax books before, and then they were stair stepping it down where instead of 100% a year, you would get 80%, 60%, 40%. And then it was supposed to go away, and then it came back. So I do agree it's one that people sleep on, but it's one that I feel like it goes like this. So you have to kind of stay in the know of what the current laws on 100% or a bonus depreciation in general.
Strategize beforehand. So what is one tax related question that agents should be ready to answer with the investor conversation?
Oh my God. I feel like the common one is well, I think initially they're like, well, how much am I going to have to pay in taxes? At which point I say, I don't know because I'm not an accountant. But I think a lot of it is how do I save on taxes? How do I avoid taxes? Especially, I will say for those clients that are getting ready to list a property and sell a property. I think that's one question I hear a lot is how can I save the most on taxes if I sell this place? Or is it worth it if I sell this place?
Yeah, I think I'm going to say the same thing. I think that's probably the most common one for me is I deal with a lot of people that inherit properties and they're like, all right, if I were to sell this, how does that look? Well, maybe we have to dive a little bit deeper. When did they buy the property? When did you inherit it? And things like that. So just kind of understanding those things. I think that's probably the most common one in our area.
Okay. All right. What's one phrase that immediately tells an investor that you have no clue what you're talking about as an agent on the tax side?
A phrase, that's tough. I mean, if a client were to bring up one of these things that we talked about today and you see a blank stare from an agent or they try to BS through it, that right there is a immediate X, right? If somebody doesn't know what a depreciation is per se, that's something you as an agent, whether you're working with investor clients or not, you need to know what that is. So make sure that you're rewind this episode, do some research so that you have enough to be dangerous when you're having these combos.
Yeah. Or the agent that's just like, there's tons of tax benefits. Now let's get back over here to look at like, okay, what kind of property do you want to buy? And then they just kind of end it there. At least if they say, I know there's a ton of tax benefits, the best thing to do is to chat with your CPA. I don't want to say like if they tell you to, I actually think if someone tells you to chat with your CPA, they probably are smarter than they look. Obviously recognize they don't know what they don't know, but I think it's the person that's like, yeah, there's tons of tax benefits. You should absolutely buy it for the tax benefits. It doesn't actually go into any of the tax benefits or guide you on how to find any of the tax benefits.
So last question, what is the first book, the podcast, or a resource that, an agent should consume when they're trying to learn a little bit more about the tax side of real estate?
Ooh, I mean, aside from getting a coffee date with your accountant, what is it called? It's a Bigger Pockets book. I have
Yeah,
it downstairs. You're gonna make me run downstairs. It's
I
by
got it right
Amanda
here.
Hahn. Hahn and her husband. They are Bigger Pockets authors. They are CPAs. They do strategizing for real estate professionals. And they have actually written 2 books that talk about tax laws and how they can be utilized from the real estate perspective. And then, yeah, what's it called?
The book on tax strategies for savvy real estate investors. So I read this a couple, I want to say 2 or 3 years ago, and man, there were so many different things. A lot of stuff we talked about today, but things you don't even think about: home offices, traveling, how you calculate all your expenses and things like that. So even if you're not a real estate investor and you're looking to work with investor clients, that book is really good. And yes, they have two versions. I haven't gotten the second one, but the first one has a ton of value.
Yeah, and it gives you like the basics. Like I said, there's probably things in there that may be a little dated because I think those books have came out a few years ago, but they give you general tax strategy, and so it's a good starting point to get you familiar with it. And then, I mean, that coffee date with your real estate savvy CPA to then go over and say, hey, has this changed at all? Like, are there differences here and here? And then kind of confirming that. Or they're in Claude, I would assume, but I'd rather talk to an actual person.
100%. And for the agent who wants to start having conversations with clients this week, the next thing that you can do is obviously come to the Cashflow Breakfast Club. And then I host local meetups every month in Arlington and in Montgomery County, Maryland. We do have a whole section about the tax benefits and 1031s. And I think that's section 10 or 9. But anyway, come meet with these individuals, meet with the investors. If you're an agent that's newer and all this is brand new to you, you really have to start familiarizing yourself with it. And the more you start having these conversations, the more you're going to be comfortable when you do end up with a client. So that is going to do it for our episode today. Please like, share, subscribe. And if you found any value, please leave it in the comments. And you can reach out to me at N Garcia Official on all social platforms. And you can reach out to Anna at.
I'm antibiotic_realtor everywhere.
All right, guys, tune in to the next one.